Inducements can be formed from the POI. Please note that order block is not the only POI. Fair value gap is also a POI. All right. Inducement price can create inducement from the order block by just touching it a bit and without properly mitigating it. And then something like that happened here in 15 minutes now. Let's go to something like that happened here during this sell that don't know whether my chart will get it did not reach there. It is where let me go to 30 minutes if it will reach there. Okay. Here. This place, you can see how price was selling all the way down, and then price created the example here. Okay. We have our order block. All right. Just below our order block, we have small fair value gap. But if you look at where price used to create the inducement, which is this, it just took small portion of the order block to form the inducement before coming to properly mitigate the order block for continuation. So yeah, price can use the order block to form the inducement. Okay. Mr. SmartFX, please, you can speak now.
Okay, good evening, Lex. Thank you very much for the class. Please, I would like you to show us how you mark your structures step by step, because some of the tricks I've seen you take looks like a loan structure. For instance, there was this trade you took on the 17th of February from a on the 17th of February from a 30 minutes OB on the 6th of that formed on the 6th of February. And it looked
Okay,
like
hold
a
on.
loan structure.
In 30
Hello?
minutes.
Yes.
In 30 minutes. Which date is that? Sorry.
17th February.
17th of February. This, okay. This is 9. This is 17. Okay.
So I noticed you took a
18.
trade from this zone, yes. And it's from a 30 minutes time frame OB that formed on the 6th of February.
This is on the 6th of
Yes.
February here.
So,
Yeah.
and it looks like a loan structure because there is the other block is there's another other block below it. So I'm now wondering why you took a trade from here. That's my first question.
Wait, let me answer your first question. Price, this other block is already mitigated. Price took the mitigation with this candle. See it. All right. Price tap into this other block with this candle here. Look at it. Look at the
Yeah, I
mitigation.
can see it.
Formed a fair value gap. Price came into the fair value gap. What is that? All right. This candle that mitigated this other block, price left a fair value gap on it, came to mitigate it. And then this place that I used, did it mitigate the structure that mitigated the fair value gap? Yes. It's just like a transfer of strength. Okay. Just like a transfer of strength. All right. And then this zone right here is a
Yes.
continuation, it's like the tip of it's a 4 hours order block that was here. I don't know if this chart
Yeah, I
presents.
saw the 4 hour
Okay, you
that block.
saw. All right, all right. So it saves me the stress of going back to What's
Then
the second question?
The second one is also similar to this, which is the statement you made about you still being bullish until a daily close below the daily FVG. And right below where the market is currently reacting from is a 4-hour loan structure.
Let us go there. The 4 hours what?
Loan structure from where the market is currently reacting from.
When I was talking about loan structure, I said the structure mitigates into what do they call it? Into mitigation block. If the structure did not mitigate into anything, then it is a loan structure. That means there is no interaction between, it's just there alone. The reason why price is reacting from here is not because of it's not because here is a low structure. Okay. It is if you look at 1 hour time frame, you will see that. Now look at it in 1 hour. Price mitigated here for the continuation. What is here? This is you guys, whether it's breaker block, you guys call it. And the fair value gap. Okay. And then price went all the way up. Took out this as inducement, created other block, price came back into it, went all the way up, created other block here as well. All right. Now, this is why price have refused to come below. Okay. Now, this is what I saw. Okay. Look at this now. I'm marking this out now. It's not just because it's not because I want to guess that. Of course, price can still close below the daily fair value gap. All right. But it's going to take a lot of work. Why? Because I have seen that 1 hour order block correlating with the daily fair value gap. It's not that I just marked the daily fair value gap and I was like, let me just say it like that. No.
Yeah.
But the Telegram subscribers will not know this. And that is not for them to know. So let them just know that I mark the daily fair value gap, and I'm saying that I don't want price to close below it. Once price close, but the real reason is actually because of this POI. Price have tapped into it. This is the third time now, but even the fourth time. So yeah, that's the real reason why. And of course,
then
even if price fails, even if it fails now, you guys can clearly see that it has tried to hold on to price. So yeah. What's your other question? Do you have another question?
The trade you were talking about as your top 5 trade that you took on August, I should be around the 17 August.
Yeah.
You later took another trade there, despite that zone being mitigated.
I've already, but in the last class, I
was in the last class.
Were you in engineer liquidity class?
Yes, I was in the engineer liquidity.
So you should know that. You should know the reason why I took that trade again now, because I talked about it. I clearly said if price don't mitigate up to
50%.
Okay, so you are in the class. So you can clearly see that this structure order block, if we use our, what's that thing? So the engineer liquidity was created with just a small tap into the order block. And then
Yeah.
price came back to fully mitigate. You can see how price took out every other thing that is left there. Price. So that's why I actually used it again. Because the first mitigation didn't really do much. And it didn't really do much when it mitigated it first. It used it to engineer liquidity, and then the remaining ones, price came for it, and then that's it. If price had mitigated it like this, I'm sure that market would have taken out this high and made this move.
Yeah.
Yeah. So any other
Thank you very
concern?
much. I really appreciate. Thank you very much. I really appreciate.
All right. Next question, please.
All right, sir. So I'll call on Vice Choker.
Call on
Kindly
who?
put your hands down. Vice Choker. Please
All
keep
right.
quiet.
Before I ask my question, I simply want to ask the way you highlighted the previous order block, like how come you included the wicks, like instead of drawing the particular order block, you included the
Sorry, which
wicks. Can
other
you please
block
repeat
is
that?
that?
Sorry?
Is it the one that I just showed?
Yeah, recently, just recently.
Wait, the last one the structure of that block I mentioned.
Yeah, the one the previous person was asking. I just want to be sure on the precise way of marking the order block.
Sorry, hold on. Sorry, hold on. Is it the one that I said I was talking about 50% mitigation?
Yes, yeah. The one which touched first and then came the
That
second time.
is not a single candle order block, it's a structure order block. So you mark every candlestick that is involved. I've already talked about point of interest. You can go back to the recording to brush up.
Oh, okay. I think I missed on that one. That means I have to go.
Okay.
So my question is, does the concept of drawn liquidity work on God?
Yeah, it does. If your
Oh,
mentor taught you draw on liquidity, right? As long as
yes.
liquidity is involved, there's no liquidity principle that don't work on gold. All right. Me that I'm teaching you, I don't know it all. Liquidity is a broad concept. Okay. So it is the part that I know, the part that I use, that I actually use to trade. I tell you, someone else can come and teach you completely different strategy that he or she uses to trade gold, and it will still work for you. You understand? So it doesn't mean
Yes.
that because I am teaching you this little knowledge that I have, that is all there is. Do you understand? There is a lot out there. So, of course, you cannot know it all. You can just know a little, and then you print with it. So
All right. Perfect. Thank you.
please, the next person, please. The last person, Mr. Marvelous. Any other person?
All right, sir. Yes, sir. NPO.
Hi, Lex.
Good evening.
Good evening. My question is when
Please,
price
can you
reaches
speak
your zone.
louder? Sorry, your voice is tiny.
Can you hear me now?
I can hear you now.
When price reaches your zone, do you usually take the trade immediately or do you wait for some confirmation on a lower time frame?
90% of the time, I take my trade aggressively. All right.
Okay.
I don't wait for confirmation. Sometimes if I want to wait
Okay.
for confirmation, this is what I do. Sometimes I wait for fair value gap to be created. Now let me show you. Yesterday I was actually waiting for price to come into this fair value gap for me to take entry. Look at it. Price has been ranging and I've not been in this market. All
Yeah.
right. So when markets finally moved from here and form this fair value gap. I was waiting during Asian session. Okay, that when market opens, I want market to come into this fair value gap. Just like I taught you guys, if you have two fair value gaps like this, the first one is usually a liquidity. It's the second one that price likely uses. So I was waiting here. I slept off. And when I woke up, price already mitigated here and left me. You understand? So
Yeah.
that is what I do sometimes. When price have done what it needs to do, create a fair value gap for me, I take my entry. And then sometimes I also wait for reversal candlesticks, like I don't know if you're familiar with reversal candlesticks, and like the engulfing candle, the hammer, and all of that. So sometimes I also wait there for price to create that candlestick, and then I take my entry. But 90% of the time, my entries are aggressive. Like immediately price come into my POI, I take my entry, stop loss or not. All right. That is what I did
Okay.
here. As price came in, I took my entry. I didn't have to wait for any other thing. As price came here, I took my entry. Price came into this fair value gap, I took my entry direct. So yeah.
Okay. I'm not asking you to teach us structure, but could you maybe tell us how many breakup structures you need to see before you consider the market trend established?
I have to be honest with you, I've not even thought about this before. Like how many structures needs to be broken before I know that a trend is established. And it's actually a good question. It's actually a good question because I've been mentioning that after the trend is established, right?
Yes. Yes.
It's a good question, but I've not actually thought about how many structures need to be broken. All right. But what I will tell you is that when the way that your mentor taught you structure change, your mentor have taught you structure change, right? I mean,
Sure.
change of trend and market shift and all of that.
Yes.
Yes.
All right. So when the market shifts and the market changes according to what your mentor has taught you, at least 2 breaks from there, from the change, should be able to tell you that, okay, this is now the direction of the market. I don't know
All
if you
right.
understand what I mean. At
I
least 2 breaks
understand you.
from there should be because usually after the third break, market can start manipulation. Maybe come for if market changes to the uptrend, and market have broken 3 or more, manipulation can start. Okay, so at least 2 breaks from there, from the change of trend, then you can say, okay, this is the trend that we're looking at. All right. And please
Right.
note that target also matters. Target also matters when I'm sure that your mentor have taught you guys targeting or target narratives. And so if you have a particular target, like you have somewhere that you are expecting that, okay, price is likely going to go. When the market shifts and start going towards that direction that that you're expecting market to go, 2 breaks from the shift, you should already know that, okay, market is heading towards where I'm expecting it to go.
Yeah. Okay.
All
Thank
right.
you very much.
Okay. Thank you very much, Mr. Marvelous.
You're welcome, sir. But I'm almost. Thank you.